Okie dokie. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? All is good? It's my All That Jazz cup. Fancy, huh? We are financial advisors here at Jazz Wealth. We're just ourselves, right? Instead of being the suit and tie guys, I think you know the drill by now. We are just average people that try not to intimidate. We don't play games like that. And actually, tonight, Wine and Wealth, it'll be at 8 o'clock. Maybe we'll start a little early. I don't know. But tonight we do our Wine and Wealth class, and we're going to go over how our funds are made up, right? We'll go over some examples there. Maybe just do it over there in a different setup there, because our entire business model is set up to where we only grow as a company if you grow. There's no like sales commissions. There's nothing that can happen where we can make money when you're losing money. No. We grow when you grow. And so we choose to actually manage our own portfolios rather than buy mutual funds and stuff. And you could see all this in the dojo. So tonight we're going to go through that. What does it mean? What's the cash balance? And what is the cash positions? A little bit of confusion there, but I'll explain why and show all of that and go over some changes and things that we'll be making as well. We like to say we're 100% transparent. No question you can't ask. So if you're one of our clients who want to come by tonight, come have a drink with me, and we will go over everything with you. I like that, by the way. You know, there's nothing to sell. You can just talk to us, ask questions. We can help you with anything. You know, you're not going to get sold something, and it's all good. Stock market today, the Fed watchers, because Jerome Powell speaking again today, the Fed watchers have noticed a change in his language. I don't know if you know this, but there are whole software systems you could buy that analyze every single word that he says and what their different press conferences and testimonies actually have in them, all the Fed members, and whether they're voters or not. It's really intense. We've gone from the idea, remember we talked yesterday about a soft landing, meaning can we recover from this without a recession? That's essentially what they're saying. And he's changing his language. So before, he was saying that we could do this in a soft way. Then he started saying soft-ish, right? That was last week. Now he's changed it from it was bumpy, so the recovery may be a bit bumpy, to now he's changing his words, not even using soft, soft-ish, or bumpy anymore. Now he's using the words some pain may be felt during this recovery. So he's slowly trying to go, look, I'm trying, man. I'm doing what I can do, but we may get in a little bit of trouble there. So that was one of the things that's been noticed. Is everything else that he said, it's like, okay, we hear you, bud, but why'd you change that word? Believe it or not, that's actually how it goes, and has gone that way since 1994 when they started doing press conferences. As far as the S&P goes, the bulls won the boredom today. That was the title of the video, because there's an old saying in the stock market where you say, you don't short a dull market. And we currently have a dull, but hopefully recovering market. And so when the market gets a little boring, it has its natural drift higher. So you don't want to be caught shorting that. That's the old idea there. We're still at about 20% away from, or 20% off of highs. So you got your 20% discount there. If we look around today, there we go. Energy, there you go, was one of the weaker spots. It was officially the weakest spot, down another 3.5% on the day. So if you're looking around at some of the energy stocks, just like yesterday, it's all the same ones. ExxonMobil down another 3%. Chevron, ConocoPhillips, Pioneer, EOG Resources, Valero. The only one that was higher was Occidental Petroleum. We'll cover that later. That's a Buffett story right there. You got some financials were weak on the day, so which is a good thing, because I think a lot of you are looking to try to scoop some of these up. Bank of America was lower, but the boredom leaned its way towards the bulls there. Wells Fargo's the same thing. JP Morgan started off a little bit weaker as well. In fact, did make new lows, but managed to close off the lows. And then look at the regionals as well. Regions Financial also hitting new lows. Not as big of a recovery there, but regional banks kind of interesting. And some of the tech stocks were lower today, in particular semiconductors. If you're looking around there, you got Qualcomm, AMD all lower on the day, Texas Instruments a little bit, NVIDIA down a little bit. Broadcom finished just positive on the day. But other than that, most tech stocks were, in fact, a little bit higher today. Tesla was one of those that did finish lower by a little tick there. But other than that, that's kind of what you got going on. Healthcare, I'll talk about again. Another recovery in healthcare, which is going to be important in a second. So I'm going to teach you something there. The healthcare rally continues. We're moving our way back to the 50-day. That's what we want to see the stock market do there. Most of the news was wrapped around Moderna. Moderna said, the FDA says, Moderna, we think you probably ought to give 2 COVID vaccinations to kids that are under 17, I think it was. And so that came out today. That helped them. If you're looking around in that space, it's all the same names from yesterday. Eli Lilly, remember, relative strength. We talked about that yesterday. Pfizer, another one there. They all played together, all helped the sector move higher on the day, whether they were insurers, the drug manufacturers, the biotech companies, anything in the space happened to give you a little bit of a rally there. The NASDAQ continues to get a little relief rally. Not great. I mean, it was up 1% today, but that was thanks mostly to rates. Interest rates are falling back down again in a meaningful way, not just having like one good day higher. So again, prices higher mean yields move lower there. So that's helping out there, but we're still down 28% about year to date. We've got our oversold rally in place and a pretty low volume relative to the recent average as far as the NASDAQ goes. Now, as far as the S&P goes, we do a little lesson time here today because when the markets are boring, I like to teach. I like to teach anyways, but let's take a look. You know the S&P, whether you're using the futures or you want to use the index, SPX, or using ETF like the SPY, we're referencing the S&P. It has 11 sectors, and the S&P is a market-weighted index or value-weighted index. So in other words, the larger the company is, not by stock price, but by pure valuation, the more weight it has on the index there. And so it's based on the values of the companies. The values of the companies can change over time, and it's a good way to see, looking at the individual sectors, it's a good way to see the impact of an individual sector on the market. There are some sectors that really can't do much at all as far as the market goes, even if they have a great move there. But I want to show something to you here. So let's go over here. We did a little breakdown. There we go. Here is the current percentage sector weighting by sector, right? So the obvious one over here is tech. Tech currently makes up 27.26% of the entire S&P. If tech has a good day, it's very likely that the S&P is going to have a good day as well. Now, at the bottom, we did something different. See the 76, 64, 66, etc.? That's the number of stocks in each sector. There are 76 stocks that make up the tech sector and account for 27%. So we take the stock market, the S&P, and say that's broken up into 11 sectors. And of the 11 sectors, there are stocks inside of them, in this case, 76 of them there. So you'll notice that obviously there's a big name there. You've got healthcare, financials, and consumer discretionary. The next three there, looking along, they're the only other sectors currently that make up 10% or more, double digits, of the S&P 500. Now, this can change as the value of these stocks inside of the sector go up and down. So, for example, industrials, here it is, has 7% of the S&P's weighting, even though it has 71 stocks, the second largest amount of stocks in an individual sector. So those 71 stocks, a lot of them, right? It seems like a lot, can have a really good day, but if everything else is down on the day, it's not going to move the market there, right? So kind of interesting there. If you look at it, tech is about 3 times as large as industrials in percentage terms, but it has about the same number of stocks. So that's why you can see things like that. Why are industrials doing so well, but it turns out the stock market doesn't really care? It's because it only makes up 7% of the entire sector there. Notice that energy right here is 4.5%, 4.55%, has 21 stocks. And isn't energy the best performing sector of the year? Still, right? Even though this recent pullback has hurt it a little bit. Energy, if we look year to date, is still up 30%. At one point, it was over a 60% gain year to date. That was the only sector, by the way, that was positive for most of the year. But it can be up 60%, but because it only makes up 4.5% of the S&P, look how strong of a rally energy can have, and it had no impact on the market. Right? It did not do, the market moved lower, right? All year we've been going down, energy screaming higher, 60% higher, but because it's such a tiny piece of the S&P 500, it really has no impact there. The smallest 6 sectors, materials, real estate, utilities, energy, consumer staples, and industrials, are almost all combined the same weighting as tech. Shows how important tech is there, right? So we used to say as tech and financials go, so goes the market. Well, that was back in my day, 2006, 2007, somewhere in there. That is not the case anymore. It used to be that financials made up 22% of the stock market and tech made up 33%, give or take a tenth of a percent. So you would have 50% of the entire stock market driven by two sectors. If those two sectors had a good day, it was very difficult to see the other 50% of the market. It would have to be down so much. All these other sectors pull the stock market lower there. Now, as the stock market moves, the weightings can change. So periodically we talk about these weightings. Since the beginning of the year, here's the change in weighting per sector. So energy's 60% rally throughout the year has caused it to earn an extra 1.81%. So we were down here under 3% total, but the rally this year added 1.81. Now we're sitting at 4.55. Healthcare, you can see, actually over the years, healthcare has added more and more and more. So since the beginning of the years, it's up 1.74% more weighting in the S&P 500 there. So really kind of an interesting look. You got tech also losing 2%, which nobody really noticed, right? Because it was at 29%. Now it's down to 27. Doesn't matter. Still a big piece of the puzzle there. But it's kind of a cool way to look at the overall market, right? How do these weightings change over time? And this is only year to date, by the way. If you were to look back 5 years, 10 years, etc., you'd notice financials had a bigger piece of the overall market. Their values have come down, and so now they're not as heavily weighted. They're in third place relative to the rest of the market there. So I don't know. This is a cool way to talk about the S&P, maybe how things work. Did that work for you? Did you learn something? If not, let's move on. So taking a look here, a couple other things, right? Let's just look at oil. We're starting to use less gas out there, but that's not going to be the same seasonally. It's a little bit, which is a good thing that we're using less gas, because I don't know if you saw the energy secretary says that our only option is to go green now. That's all we got. That's the only way gas prices come down. Easy, all right? We need fossil fuels. You need it from everything that's made up of your phone to the paint on your car to your computers, things like that. So we can't go away from fossil fuels. Oil is used in anything almost that you see. The plastic on my computer here, pieces of this rubber that come out of this right here, this is all made up of oil. So we have to have it. But I somewhat agree with her that, look, we can have electric vehicles. We can maybe have hydrogen. Maybe someone can figure out water, right? There's people that say they can do that. We can go in multiple different rates. Ethanol could still be a thing. We just can't go all in one direction there. Anyways, this week we used 9.1 million barrels compared to 9.4 million the same exact week last year. Gas station demand is now down 8.2% compared to this time last year. So there is definitely an impact of these higher gas prices there. And there's also circulating around the internet now is a gas boycott. July 3rd, 4th, and 5th. There's people who are trying to get something together where we all don't buy gas on those days. I don't know what kind of an impact that would have, actually, but that's what's in the news as far as oil goes. And so a little bit of a pullback. You also have more production starting next week by OPEC Plus, which is planned, and they had already planned to do that, but that's what you got going on there. New high. That's really all I got for the market-wise. If we look at new highs and lows for the day, there were no new highs, but only 39 new lows. That number is declining slowly. If you look at Dow Chemicals, that's one of the more extended ones. Remember, I'm trying to point out these extended stocks that are making new lows, not just random names that are making new lows, so we have something to build a watch list out of. Freeport-McMoRan lower as well. You're going to go around to different sectors. You're going to find Hilton, the hotel company, also making new lows, which is odd because they're like totally booked. Caterpillar lower, and so was John Deere. That is mainly economically sensitive names that, hey, if we're now going to have a pullback that is going to require some pain, then maybe that means, recession. So that's what you got going on over in that world. Stocks in the news. You got Darden Restaurants. You probably know one or many of the names of their restaurants. Olive Garden is one of them. Capitol Grill, Seasons 52, Yard House, some of the Bahama Breeze, I think, is one of theirs. We have down here. Anyways, they've decided to bump up their dividend there. They're going to be buying back more shares as well. They're killing it, actually. Capitol Grill, ADVs, Season 52, Yard House, and Bahama Breeze had record results for the year. This is coming directly from the CEO, even in the midst of historic inflation. I found what was interesting out of their transcripts there. At Olive Garden. Mother's Day was the highest sales day ever for them at Olive Garden, and it was the second highest guest count day ever on Mother's Day. There's an Olive Garden on my way home. These boogers are always busy. Every time. I always look to see, like, is there something else going on there? And, like, people are parking there and using their parking lot. No. People are going to Olive Garden. They are also continuing to price below inflation. Maybe that's why you're going to these restaurants. You're finding yourself a good deal. So it was good news for Darden Restaurants. A really good earnings report, actually, for them. And I found it kind of interesting to read through a little bit of what's going on. They're going to continue to price below inflation as well to try to keep that traffic count up. And so far, that is working there. Netflix. You pay to watch the shows and the movies. They're looking at ad-supported offerings there, where you can actually advertise on Netflix. Maybe the user would pay less, but the subscriber or the marketer would have the ability to run ads. It's a matter of time, really. United Airlines says it's going to cut 12% of its daily flights out of New York hub. It's kind of interesting that all the airlines at the exact same time are like, oh, chaos. What? Out of nowhere? That's still going on there. Occidental Petroleum, you got Berkshire Hathaway bought another 10 million shares. That's about $500-something million. 530 million, somewhere in there. So they like this pullback. They have added on this pullback. That is one of their bigger holdings now. Nike, it's going to leave Russia. Another company just to completely leave Russia. I actually watched the documentary on McDonald's leaving, and they're taking down the arches and everything and changing it into a state-run restaurant, and how people are lining up and everything. Still looks like McDonald's, but now it's like not McDonald's. It's kind of interesting. Anyways, so Nike's leaving now as well. And anybody want to tell me what's going on with Weber? Weber Grills here. Notice this one just blasted off today. It was up over 30%, all in one fell swoop. It finished the day around $10, up 16%. It is the, what do they call them? Bets, the Wall Street Bets people. They are going after Weber as a short covering stock to look at there. At least this is a company that has made money. I don't think they make money at the moment, but at least that's better than Revlon. I mean, for God's sakes, these people with the Revlon down 10% on the day. Anyways, just thought that was fascinating. It was one of those odd volume stocks for the day that caught my attention. And best of luck to you. Carnival and CarMax tomorrow with their earnings there, and that's pretty much it. You got another Fed member speaking. Mr. Bullard is going to be speaking tomorrow, but that is it for a Friday. I'll take your questions now if you happen to have any questions, and we'll get on with the get on there. Russia's going to make their own Nike. There you go. Oil inventory numbers did come out today. Yes, I do believe they were late. Yeah. You want to increase your Nike position? You like that? They're leaving there? So, okay. They'll be just fine, not in Russia. So same thing. There's a lot of stocks that look like this right now. Let it bounce first. Why you gotta buy here and take a guess? I mean, I guess the one side is if you buy at 108 and you want to have a stop around 102 or under $100, it's a smaller risk to reward. But I don't know. What's your current average cost? You know? What do you got there? Chewy. Haven't looked at that one in a while. So there you go. That's a little bit better. You could confidently look at that and say, if I bought here, I know I was not the only one that believed that this 19, or where is it at here? Like $20, give or take. That was not, or that was the low. So there are people saying, that's it. This is the low. This is a higher low here. I'm excited. I want to be a part of this. At least then, you know you're not the only one. If this turns around and heads south real quick, you know you had a bunch of people there with you. And it wasn't you. It wasn't your strategy, your approach that was wrong. It was that everybody was wrong. Yeah. What you think is better long-term investor, Altria, Google, or Amazon? You'd be tempted to look at Amazon. Right now, it's not participating as much. It's been relatively weak compared to all the other large tech competitors out there. So that one would catch my eye just being a contrarian. Then it would be Alphabet. And then Altria if you had to have a third place, I guess. When should you sell your Revlon? Oh, there he is. There's the person playing along. What are you waiting for, right? A little tough love here. You bought a stock that has no business going up and you made a profit. What are you hoping happens, right? I would take the money and run. I would be well on my way. Yep. Day trading the S&P, most of the gains loss happens after hours. It's up 1% today, but during intraday, it only moved 3.3%. That is, in fact, a very accurate statement so far this year, that if you were to buy the open and sell the close as a strategy, or buy the close, then sell the open, you would be up double digits by buying the close and selling the open relative to buying when the market was open. That's an accurate statement there by Brent. And a fun stat that I had in my head for some reason. What about, where'd it go? Bank of America there? Yeah, bank stocks in general. I think you have to be dipping your toe in the water here for sure. Yep. Appreciate the comment there, Philip. Juul is banned in the U.S. It is official. Yeah. Yeah. Oh, I don't know anything about those. I don't follow the Wall Street Bets things. It's just I happen to see Weber take off today. I think everybody else is on. Everybody else is like, get out, boy. Revlon, you made your money. Run, man. Yeah. Oh, Wall Street Bets was them. That makes sense. Yeah. There's still those people out there. Do you think REITs and what do I think about? Help me with that question there. Yep. Do you own Smith & Wesson there? So you've got, you had a good run during the day. I'd call it flat so far after earnings. It's wiggling around a little bit. What are you hoping for? What's the deal? That's one of those beaten down stocks. It's hard to pick on a beaten down stock. I like to, but I don't have anything good for you there. Better to get stocks or an ETF in the Roth? They could be comparable. So it'd be very hard to say that there is one better than the other. I personally like to build a portfolio rather than pay somebody to do it for me or buy an ETF, which is the same as paying somebody to do it for you. I like the control of that. I like to watch everything. I'm always paying attention. That's not the case for everybody. So there's a place for ETFs there. But one is not better than the other unless you're a horrible stock picker. Yeah. There you go. All right, I'm going to get ready for Wine and Wealth tonight. You guys going to hang out with me? Last week's Wine and Wealth was public, and so you could actually go back and look and see how we do things if you are interested. If not, hey, that makes sense too. But I'll be back tonight in the dojo, so you go right on in there. You see me right around 8 o'clock, and we'll do a little talking about portfolios. How do they work and everything. For the rest of you, enjoy the rest of your day. Thanks for hanging out with us here. Appreciate everything. If you would hit the subscribe button, we do like that as well. And it's free, doesn't cost you anything. But enjoy the rest of your day. We'll see you later.